Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and I got a favorite guest on the line, somebody who always gives us the pulse on what is going on with physical precious metals. Andy Schectman of Miles Franklin, a dear friend, someone I constantly refer people to if they want a trusted source, and someone who really educates his customers on what is going on in precious metals. So Andy Schectman, thank you so much for coming on Crush the Street with me today.
Kenneth, it's my pleasure. It's so good to hear your voice. I'm glad to hear everyone is doing well and in these crazy times. So honored to be here. Thanks for having me back. And yeah, let's get into it, brother.
Yeah, it's been a crazy time. And, you know, all that's really been on my mind lately is just what's been going on with this GameStop, this exposure of manipulation, the Wall Street bets crowd, and obviously the implications on the precious metals, the physical market. I loved your panel that you guys did with Chris Marcus, David Morgan, a number of others. I was watching that. I was watching it live while you guys were doing it. But, you know, I guess, too, there may be a little bit of a letdown going into the week. I mean, I think some of us had some pretty high pie in the sky expectations, like, man, you know, silver could open up $10 higher, you know, $20. I mean, who knows, right, with what's been going on and what we saw with GameStop. But let's just get your initial thoughts on that.
Well, first of all, yes, I understand exactly where the pie in the sky type of dreams were. Let's go back to that and talk about what that really looked like. First of all, there's a lot to talk about regarding the Wall Street Bets group and the Reddit group. In fact, I've been asked to do an interview with that group tomorrow night. I'm really looking forward to it. First of all, when that happened, you had a massive amount of physical demand. You look at SLV as an example, and I don't know, north of 100 million ounces was put into the SLV over a couple of days, record deposits. I was working since last February, 18-hour days, every day, 7 days a week for over a year now. What I saw last March and April, I thought could never be duplicated or repeated. And it was child's play to what I saw last week and the week prior during this GameStop Reddit phenomenon. The last Saturday, a week ago Saturday, is when everything got, or Friday is when everything got really crazy in the respect that most of the online dealers shut down Friday night. We decided to shut down Saturday night. And here is the reason. And then I'll get into about it opening up and my feelings on all of that. But okay, so we were getting that whole week I personally was getting north of 500 emails a day, maybe as many as 600 or 700. It's slowed down a little bit right now to about 450 a day, but it was pure insanity. And 200-300 phone calls myself personally. That's not even including our switchboard and my other brokers and our main email inbox. It was inundation to the point of all of my brokers hands on deck, working literally the entire 24-hour day, less the time they were sleeping, which was certainly less than they were used to in terms of sleeping, waking up at 6 a.m. and getting right back at it again. And as of yesterday, we just finally got caught up to replying to everybody that had contacted us as long as 10 days ago. The amount of demand was unlike anything I've ever seen, ever, times 10 in the 31 years I've done this. That Saturday when online dealers closed, or Friday when they closed, and when we closed Saturday, it was done for the following reason. So typically on a Friday, my head trader will call me up and he'll say, Andy, do you have any interviews over the weekend? Anything I need to know about? And the reason he asked me that is that if I say, yeah, I have an interview with Ken Amadura and a few other people, and what he'll do is he'll go long into the weekend. He'll buy a bunch of contracts so that we can lock in orders over the weekend and not worry about the market gapping up too much and getting crushed. So on Friday, he would buy the contracts and we would sell it at Friday's price. On that Friday, we bought 55,000 ounces, 11 contracts into the weekend, which typically would be fairly safe, we would figure, for a Saturday and Sunday. The market closes at roughly 4:30 or so Central Time on Friday and opens back up at 5 p.m. Central on Sunday. The reason everybody shut down and the reason we ended up closing down on Saturday is because you end up going into the open naked exposed. What I mean by that is that we ended up selling 90,000 ounces of silver on Friday evening and Saturday. So we went into the open on Sunday night, 35,000 ounces naked exposed. It ended up costing us over $40,000. We covered as quickly as we could Monday or Sunday night, right when the market opened, but it gapped up so much that it cost us almost $40,000 because we were naked exposed. And this is why all of the companies shut down their online portals over the weekend, because they too were expecting a much, much, much higher open. And here's the deal. The demand is real, whether you're talking SLV, whether you're talking physical metal. The demand in this industry has emptied the coffers of most of the online companies. And I would like to talk about our position at some point, because I've been ahead of this for the last year, and I'll explain why I've been ahead of it and how I've been able to stay ahead of it. But when we closed down on Saturday night, that's the first time in 31 years I've ever shut down my trading over a weekend. And as a caveat, this last Saturday night, just a couple of weekends, or this couple of days ago, rather, as we're doing this on Monday, the largest distributors in the world, the wholesalers, the big primary distributors, all closed down their portals over the weekend because they didn't want to go naked exposed into this open today or last night, Sunday. But suffice it to say, the real issue here is that there is a immense amount of demand, so much so that we're seeing for the first time in my career, whether it be my company or the largest distributors in the world, shutting down online trading over the weekend because they do not want to go naked exposed into the open, when all logic would dictate the price should be going through the roof. But here's something that needs to be understood. On Tuesday, I believe it was, 1.5 billion with a B ounces of silver were dumped pretty much at the open in very thinly trading. That's called an access market in between the PM fix in London as it opens up into New York. And everyone's sleeping, no one's trading, and any idiot who would dump 1.5 billion ounces of silver immediately instead of bleeding it out over several hours or days is doing it specifically for effect. It's a drive-by shooting. You see all these new people who jumped on board. The Johnny-come-latelys certainly haven't lived through what you and I and everyone else who's been in this game long enough understands about volatility and manipulation in the precious metals market. I would submit most of them didn't even know that JP Morgan paid a $920 million fine for spoofing and manipulating the precious metals market. And so what had happened is that they dumped it to create a perception of reality that would knock people from the tree. And I think to some degree it worked, but to some degree it didn't, in the respect that our business has gone up just as much after it as it did before it. There is no real measurable effect in demand, even though the price got clobbered. And so, we mine 800 million ounces a year, and they dumped 1.5, almost twice mine supply. 1.5 billion ounces were dumped on Tuesday, and this is not how any logical, rational trader would sell a large position to maximize return. Instead, it was done to maximize effect and scare the hell out of people. And if you've been at this long enough, you laugh at that because you realize that their efforts are getting fewer and fewer and fewer results. And here we are again today, up 80 cents. It's climbing right back up. And so they are exposing the underbelly of this gross problem that you have commercial banks and large funds that are trying to manipulate perception of reality through naked shorting, and it's beginning to have less and less and less effect. And so, yeah, I think all those people who were expecting the price to go to the moon, logically, it should have, with the amount of demand that we're seeing, with the amount of inflows into SLV. If demand had anything to do with free market price, then indeed it would be much higher. But I would submit to you, we have an asset class in silver that had a 300 million ounce shortfall in demand last year. And that was when half of the world was shut down. So industry was shut down, and we still had 300 million ounces shortfall, over 200 million the year before. I did an interview with Keith Neumeyer a few weeks ago on our YouTube channel where he said to me, Andy, world over, the world is pulling 8 ounces of silver out of the ground for every 1 ounce of gold that they mine. Because I had asked him, what do you think about the gold to silver ratio? And at the time, Ken, it was 80-1. And he said, Andy, I'm less concerned about the gold to silver ratio as I am about the mining ratio of 8-1. And I said, well, if it's coming out of the ground, Keith, at 8-1 and it's priced at 80-1, I mean, can that last? And he says, well, you tell me, Andy. He says, how long can we mine it at 8-1 and sell it at 80-1? And so you look at it at silver and look at the fundamentals behind it. And let's just remove ourselves from the price action for a minute. Number one, you have an asset that is found in nature called epithermal. That means it's found very close to the surface. And so the low-lying fruit was picked many years ago, long even before the advent of advanced imagery. So you have fewer and fewer big silver deposits, and that's why there's only a handful of large silver mining companies out there. Many more gold mining companies than there are silver. In fact, right now, Ken, over 70% of all the silver mined in the world comes from byproduct mining of other metals like gold and zinc and copper and what have you. And so the dedicated silver mines are few and far between, number one. Number two, massive shortfalls, over 500 million ounces over the last 2 years between supply and demand. Number three, you have Biden's Green New Deal, away from combustible engines into solar power, battery power, wind power. All of this takes an immeasurable amount of silver. Number four, you have the Chinese Belt, Rail, and Road Initiative. It is the largest infrastructure program in human history underway right now, connecting not just by rails and roads, but also infrastructure, Asia and Africa. 65% of human population is attempted to be connected right now by the Chinese. The need for silver is exploding in that area. You have the field of biocides, which is a silver spray that you would put on PPE masks and on countertops and on keypads and on everything where people are touching. This has silver in it in an attempt to kill bacteria and viruses. You have the ever increasing expansion of battery powered vehicles. The need for silver is expanding so rapidly, and the supply is diminishing so rapidly that the price outlook for silver is amongst the I think the best in the world, and maybe the buying opportunity of a generation. And lastly, it's like the only asset that I can think of that is bracketed on both sides by massive demand. On one end, you have industrial demand that is ever expanding. And on the other end, on the other side, you have investment demand that is ever expanding. I guess the last piece of the puzzle that I'd like to mention also that to me is for all these people that are worried about the price, look at what I've just said, and then look at this one last piece. Last year, 2020, we saw something on the COMEX market that I look at as maybe the most defining characteristic of 2020 on all of the craziness that we saw. And that was what happened on COMEX. Typically on COMEX, we see two groups of traders. We see the commercials versus the specs. That's what you see on the Commitment of Traders report that they publish each month. And the commercials being JP, Goldman, Citi, and the boys, and the specs being hedge funds. But last year, we saw the rise of a new reportable group that is titled the Others. This is believed to be sovereign wealth funds and family offices and billionaires. They took over 320 million ounces in deliverables off the COMEX last year. That's almost a decade worth of product delivered. Typically, we never see virtually anything delivered off of COMEX. In one delivery month, and there's 5 or 6 in silver, they were taking as much off in one delivery month as we typically see in a year. And I would submit to you, these people are tied into the people pulling the strings. You have the wealthiest, most influential traders on the planet, these sovereign wealth funds and family offices, private investors, that are doing what the central banks have been doing the 3 years previous. And that is pulling metal, delivering it off of the exchanges. The central banks were doing it since 2018 or late 17 by pulling metal home from the New York Fed and the Bank of England. That was starting with the German Bundesbank, the Bank of Hungary, the Bank of Austria, the Bank of Poland, the Dutch National Bank. They're all repatriating their metal. And this was after the reclassification of gold as the world's only other tier one asset next to treasuries as far as central banks are concerned. You can see there's a chain of events here that all center around the importance of precious metals, the removal of counterparty risk, and the massive acquisition by the most well-funded, well-influential, well-in-the-know people on the planet. So I guess what I would sum it up with, Ken, and I don't mean to answer your question in such a very drawn out way, but I would simply say that price is the greatest tool of misdirection that there is. It is the ability of the elite to move the masses in the opposite direction by gassing the price and in any given direction. And if you push the price down, most people don't look under the hood. They move on and look at Bitcoin at all-time highs and the Dow Jones at all-time highs. And even though in the case of equities, it's the tail wagging the dog, the economy does not justify all-time highs in the equity markets, people don't look under the hood. And I would simply submit to you that when the most well-informed and influential and wealthy traders on the globe, starting with the central banks and the commercial banks and now the sovereign wealth funds and the family offices, are all massively accumulating metal and doing something in common, that is removing counterparty risk by pulling it off of the exchanges or taking possession away from the Bank of England and the New York Fed. That is what you should follow. Don't look at the price. Look at what they're doing. They are positioning themselves ahead of the crowd, ahead of the little guy. And the only way that they are able to do that is to manipulate the shit out of the price so that people don't catch on. And as far as the Reddit group is concerned, I would submit this to you. The law of unintended consequences is taking place. And I would like to look at Keith Neumeyer's stock again in that respect. When you talk about First Majestic, they tried to short squeeze it. When the exchanges fought back, they said, no, you can only buy one share. Now, what kind of crap is that? The big investors, even if they have nothing to do with metals here in the United States, the average investors who are just happy in equities and mutual funds are waking up to the fact that it's a rigged game. There is your law of unintended consequences. Whether or not they notice to buy gold or silver is one thing, but they are realizing that what is happening in the stock market right now is not normal. I've done this for 31 years. I've never seen anything like it. And I think even the most ardent stock bulls are waking up to the fact that, geez, this is not what I signed up for. This is a market that is way too manipulated, whether it be a group of traders can short squeeze or whether it be the reaction of the exchanges to mitigate the ability of these traders legally. They're doing something legal and the exchanges change the rules on them in favor of the big guy once again. So the law of unintended consequences is that people are waking up to the fact that it's a rigged game. And the only way to beat these guys is to buy and take it off the exchanges and buy on the dips and overwhelm them with physical supply because they're trying to shake the weak hands off of the trees, Ken. And I really honestly believe that because we've done more business since the beginning of the year than anything I've ever seen in 31 years. And when I tell you I'm working 18 to 20-hour days, as God is my witness, I'm serious. I literally go to bed at 2 or 3 o'clock every morning. I wake up at 6 every morning and am completely engulfed in business, literally for 20 hours a day without even stopping to breathe. I was in Florida for 2 weeks when this all went on. I did not go outside once, literally. I mean, other than to grill some steaks in the backyard one night on a Saturday night, but short of that, we were in an Airbnb. I was sitting in a den for 2 straight weeks doing nothing but replying to emails, talking on the phone, and doing podcasts. So I know I'm kind of wound up right here, but I just want people to understand that what is happening right now on price is completely detached from reality. You must not look at price. You must look at the fundamentals. And they're speaking really loud right now, Ken.
Yeah, it's powerful. And I appreciate that. And I agree with you. And maybe this will wind you up a little bit. Man, and I know a lot of people are thinking this, and I'm a believer. I am selling my silver and gold at these prices. It's just, this is not why I'm in the game. But what I get and what I hear from people, maybe you're already answering this question, is if silver can't go higher materially in this environment, how will it ever go higher? Like, maybe take it from that angle.
Because it will go higher in this environment. 100% it will. I think it reeks of desperation what the big money is doing by shorting a year and a half worth of mine supply at the open. It reeks of desperation. And this is where the rubber meets the road with this group called the others on COMEX. And what is happening is they're standing for delivery. It doesn't matter what they do to the price. They're going to bleed the COMEX dry by continuing to stand for delivery, just like the retail buyers will bleed the world dry of physical silver by standing for delivery and taking possession. You see, just like the London gold pool was overwhelmed, this will be overwhelmed too, I believe, because Ken, the only way over time that you can successfully manipulate a market is to push it in the direction that it is going. And, we have an awakening. I have, for the last several months in retrospect, and people asking me about 2020, I called it the Great Awakening. People are awakening to this. Look, there are very few, if any, asset classes that are trading at 50% of its double peak all-time high in 1980, just barely above it right now. And that is silver. And yet an asset that is being massively accumulated, massively. We did 7 or 8 times what we normally do in a year last year in sales. And this year makes that year look like child's play. The physical demand is off the charts for every retail company in the country. You have to continue to believe that this will have effect. And so it will go higher. Undoubtedly will go higher. And in particular, it will go higher in the face of continuing dollar troubles. I mean, look, Biden's deal just got approval from the House, $2 trillion more in COVID relief. We created $9 trillion or so in the last year. It took this country almost 300 years to create 800 billion in wealth. A trillion seconds ago was 31,688 years ago. Now ask yourself this. Who in their right mind would buy U.S. Treasuries right now with interest rates in real terms negative when you factor it against inflation? So the answer to me is nobody but the Fed. And so we're in a world of trouble. And I think when you look at the amount of debt that we've created, the world is going to run away from the dollar. And I think you're seeing that in the fact that the Chinese and the Japanese are no longer buying our treasuries. If anything, they're selling it. Interest rates have nowhere to go but higher. And I think you're looking at the potential for a massive problem, a trifecta, as I would call it, in stocks, in bonds, and in real estate. All of them, for the first time ever, are at all-time highs at the same time. And that's because of manipulated interest rates. But the problem is that I think the world is looking for alternatives to the US dollar and their investments, because when you see markets at all-time highs and interest rates at all-time lows, who in their right mind would decide to buy a 10-year US Treasury paying, call it 80 basis points when inflation is running 2, 3, 4, 5 times that, by an insolvent government creating massive amounts of inflation? So what you will see happen, I believe, and that's why I think you're seeing the big money quietly reposition themselves and using the manipulated price of metals to allow them to do so without being crowded out of their trade. You can see what they're doing. Let me take a step back for a minute, Ken, and bring you back to 2017 and show you a chain, a narrative, and you tell me what you think. In 2017, out of nowhere, first you had the German Bundesbank say, send us back all our gold. We want it back by 2020. In 2018, the central banks of the world, which were net sellers the year before, purchased more gold than they did in the 60 years previously combined. In 2019, you had the reclassification of gold as the world's only other tier 1 asset next to US Treasuries, other than, as far as central banks are concerned. So you have them reclassified, but remember, the year before, they bought more gold as a group than they did in the 60 years previously combined. They had been front running it. The Bundesbank asked for their metal back. And then you started to have the Bank of Austria, Hungary, Poland, the Dutch National Bank, and many others all repatriate their gold. In 2020, we see the International Monetary Fund call for a new Bretton Woods. That's a new dollar standard or a new standard. We see this group of the others pull record amounts of gold and silver off of the COMEX, take delivery of it. You have the Great Reset coming. Everything that we see is front running of a new system. Front running of a new system by the most elite people on the planet, the in the know people. But that information is not being disseminated widely to the public. So what I am simply saying to you is that price is a tool of misdirection. Do not look at price. Look at what the big money is doing. They're repatriating their gold and silver. They reclassified it as a riskless asset. That's what tier one means. So the central banks not only massively buying it, reclassifying it. And then you have their buddies, the sovereign wealth funds and the family offices, the wealthiest individual investors in the world who probably know a lot of the people pulling the strings, front running it again. It doesn't matter what the price is. They're standing for delivery and getting physical possession of it. Everything that I see tells me that ultimately this is a market that will go to the moon. It is massive demand across the board, and it's an asset class in terms of silver that is in a massive short squeeze. You know, when you see a year and a half's worth of global demand dumped onto the market at the open, that tells you they are very desperate and they are running out of ammo because it turned right back around and it's heading back up again. So the price will rise. But if you've been at this game long enough, you have to understand that it's the tortoise, not the hare. Let me explain. Last year, 2020, silver was up 50%. It's up over 100% since March. And so here's the thing. We all need to take a step back and realize what's happened with Bitcoin. Well, that's not how markets work. I've been at this for 31 years. You don't see markets that go parabolic like this continually. You should not expect triple-digit gains in your investments in Tesla and in Bitcoin and in all of these traditional equities and in cryptocurrencies that have slanted our viewpoint as to how investments are supposed to work. You're a rock star if you make 5 or 6 or 7% per year. You're a rock star. And yet silver was up 50% and people are upset by that. That was the best performing asset on the planet if you take out of the equation Bitcoin. I mean, it performed as well as anything in 2020 and up 100% since March. So it is moving up, but it is doing so in a fashion that is going to catch people off guard. A lot of what I talk about is misdirection. I've often talked about the book, The Art of War, which is a book written in the 5th century BC by a Chinese military strategist. But that book is taught at West Point. It's mandatory reading. At the CIA, it's mandatory reading. It's taught in almost every single major business school in the world on corporate hierarchy and every law school on formulating arguments. It's a book whose premise is centered around how to beat your opponent without throwing a punch. They are misdirecting the public through rhetoric and through price. The big money controls the media and is able to manipulate the price. JP Morgan paid $920 million fine, which is bullshit because they made $1 billion on their gold desk the same year, and yet they're still allowed, after pleading guilty, paying a fine for manipulating the market, to control SLV. Now, SLV, which just since March of last year, when the price hit an all-time low for the last several years, 11, 12 bucks, I don't know, over 300 million ounces has been deposited into SLV, and it hasn't been audited since then. And you got JP Morgan, the company that just admitted guilt and paid a fine of almost $1 billion for manipulating the market price, running it. So what I'm getting at is this. You cannot look at the price. You must trust your gut and look at the fundamentals. You have to. The fundamentals will win out. And when you see the most sophisticated, well-funded, well-informed traders on the globe positioning themselves for this change in front of everybody else and using rhetoric and price to keep everyone out. I mean, this is a very thinly traded market. It could very quickly get overwhelmed by a group of 7 million Reddit users. So what do? They dump 1.5 billion ounces at the open to freak everybody out. That's not how markets work. That's not how any rational trader would do this. In fact, I'd fire someone if he was my broker and he dumped that large of a position. I'd fire him and sue him. I mean, so the point of it is, Ken, is that it's one of these deals where you have to trust your gut, and you just have to believe that over time, when the most sophisticated traders on the planet are going to these lengths to get in front of this trend before the public does, and to dissuade the public from doing it, that the price will rise. It just won't do so in a linear fashion, and it won't do so the way we expect. But if we wake up one day and see silver at $100, 200, 300, would I be surprised? Hell no, I would not. But it's going to take strong fingertips and a lot of conviction to hang on through the manipulation and through the volatility.
Well, powerful words there. And I just kind of want to round it out with just one last question. And I know you alluded to this already, but again, just shedding light and, I guess the getting the full nuance of everything that's happening. Many people really feel like gold and silver are the crisis hedge. When they see gold and silver go up, they sense there's problems. And a lot of times it's, when the stock market goes up, gold and silver go down, and, vice versa, because there's a feeling of euphoria. But I really feel like something's changing. I mean, stocks are going up, gold and silver are going up, crypto's going up, real estate's going up. It's really, and then you hear the statistics on how much they're blowing the dollar up. I mean, there's just something that's spinning out of control. And I really do feel like it's the dollar. At this point, there's serious problems and things are changing. It's not like you can compare what's going on in 2021 to 2018 to 2015. It's constantly changing, and you can't use the same sort of metrics to make investment decisions in a way.
No, of course you can't. No, and I mean, look, the amount of money that's been created in the last year alone. Look, in 2008, the Fed added $4 trillion to their balance sheet over 6 years and got a lot of crap for that. The Fed added $4 trillion in 6 months in 2020, and they're continuing to spend money, continuing to give stimulus to people. Once you start giving people that kind of an injection of drugs, you can't just stop, or everything goes insane. But the amount of money so here's the problem. The real problem is that the reason those assets are moving up, Ken, is because it has to do with velocity. So let me just explain. When the Fed creates money to buy bonds, that's called quantitative easing. So without getting too deep, here's how it works. The Fed, at least now, cannot go directly to the Treasury to buy bonds. That would be monetization of the bonds. You were right into Weimar Republic. But what the Fed can do, they buy the bonds in the secondary market from the key players, the banks that buy them from the Treasury, like Goldman and Citi and JP and some big hedge funds. They all will buy these bonds. And when the Fed comes calling, they are all obliged to sell the bonds back to the Fed. So the Fed will go to JP and Goldman and say, sell me your bonds. JP and Goldman sell them the bonds. The act of doing that, number one, lowers interest rates and levies the bond market. That's what they want. They want lower interest rates and a stable bond market so that people's 401ks and their homes stay high value with low interest rates. People can afford a bigger home, and no one's going to invest in negative yielding bonds, basically. So they speculate into the stock market. So you have the Fed come in, buy the bonds, which keeps the bond market strong and keeps interest rates low. But that money does not go to the banks. It goes into a reserve account at the Fed. And the only way that the money gets into the system, which creates money, is by the banks lending it into existence. But the banks aren't lending. The banks don't want to lend into this economy where everyone is hanging on by a thread, where 130,000 small businesses are gone forever. That's 40% of GDP, by the way. But all of these corporations with fractured balance sheets are already bankrupt or hanging on by a thread just to hopefully stay around for another few months. The Fed, the banks don't want to lend into that environment because their balance sheets suck already, going back to 2019 with the repo market problem. And then we see all of the bankruptcies and delinquencies that they've had to deal with already. Their balance sheets are bad. So they say to themselves, you know what, let's just leave it in our reserve account at the Fed, earning our 90 basis points, and we don't have to worry about default and bankruptcies and foreclosures and all of that stuff. So the only people that are getting the money, this easy money that's been created by the Fed that is not out into the system yet, are like the big hedge funds who have pristine balance sheets. They can borrow the money at next to nothing, buy equities, buy real estate in trust, buy everything at bargain basement interest rates, jack the values up more and pay it back. But the rest of the people in this country aren't getting that money. They're getting a $600 or a $1,200 stimulus check just to put food on the table or pay off debt. And that's one of the big reasons you're not seeing velocity or massive inflation. And that's the other reason why you're seeing all of these asset prices go to the moon, because they are being bid up with easy money. This is all part and parcel of what the Fed is doing by creating these massive distortions. But here's something I'd like you to think about as well. When we talk about the Chinese Belt Road and Rail Initiative, the Chinese are going to be using the digital yuan to settle things across this entire infrastructure. That's 65% of human population that is being indoctrinated into a new digital currency that will challenge the US dollar for world supremacy. It will challenge the US dollar for world reserve currency. All of this centers around a dollar that is on its last leg. A couple years ago at the Sprott conference in Vancouver, I showed a chart and I posted it up on the screen when I gave a speech, and it was issued by JP Morgan Private Wealth, the group of the division of JP Morgan that works with the wealthiest people in the world. And it was a chart showing the world reserve currencies going back to the 1400s. There's about 6 or 7 of them. And in every single case, the lifespan of these currencies was about 50 years. Now we closed 40 to 50. Nixon closed the gold window 50 years ago. We are living on borrowed time. I believe you are going to see a shift away from the US dollar over time. And maybe that is why you saw the central banks reclassify gold as a tier 1 asset quietly in 2019. Maybe that is why you saw them front run that decision without telling anyone and accumulate more gold than they did in previously 60 years combined, all of them a year before that. Maybe that is why you see this group, the others, pulled the largest amount of gold and silver off the COMEX that they've ever seen, ever. You're beginning to see the big money front run what is coming next. And when you look at the possibility of the dollar being usurped or challenged for singular world reserve currency, that was what the JP Morgan chart said. In fact, it said, and I quote, "We want you, our depositors, to mitigate exposure to the US dollar through foreign currencies and precious metals because we believe it will be challenged in the coming years, challenged for singular world reserve currency status." In other words, here again, price is a tool of misdirection. They know that. People are only looking at price. You must look at the fundamentals behind the price. You must. And so I think that you just have to realize that because of all of this, low interest rates and massive money creation and distortions in the markets that it has created, that the valuations that we see right now are impossible to determine if they're fair or if they're blown out of proportion. There is no way to determine fair value anymore because everything has been distorted through the Fed's policies. So I take a step back and I look at what these people are doing, the people pulling the strings, and you can see very clearly they're de-dollarizing and they're accumulating metal and they're pulling it off of the exchanges. To me, that is where I get my confidence. And when you see a group that after 80 years of only having US treasuries as a tier 1 asset for central banks, and they out of nowhere reclassify gold, but front run that decision by a year and a half, that's all I need to see. That was the biggest development of my career. And when you see it accentuated by the sovereign wealth funds and the family offices doing the exact same thing on COMEX, when you see the IMF ask for a new Bretton Woods, when you see the World Monetary Organization say a great reset, when you see China selling treasuries to fund the greatest infrastructure in human history, where the US is not participating and 65% of the world will be participating, it's the writing is on the wall. We have to start thinking in terms of years and decades instead of minutes and days. You have to trust your gut and have an understanding of the fundamentals, because if you just look at what's happening in front of you, you're dead meat. This has all been priced into things, into the prices. The big money knows this. The big money is moving away from the dollar and protecting themselves before everyone rushes to do the same thing, they will have already been positioned. I guess I'll sum it up this way, and I've talked about this a lot also. So for those of you that have heard this before, my apologies. I once was a financial advisor many moons ago, and I had been in this industry for half a dozen years before I went down that route to add a greater suite of services to what we were offering. And so I understood at that point Austrian economics and hard assets and Swiss francs and precious metals. That was the genesis of our business. And when I went to do this, I was blown away. The Series 7, it's called, is the test you take to become a stockbroker. And I was in a room with 50 people who were all trying to become stockbrokers. I would submit none of them had my background in hard assets. And so it probably had less of an effect on them as it did on me. When you sit down in the class day one, they give you a book the size of a large textbook. And page 1 of this book, you open it up, there was one paragraph on the book and nothing on that page and nothing else. And it said the little man rule. And so the little man never wins because he or she always moves after the big man has positioned his or herself. And so basically what that says, it encapsulates everything I'm trying to say to you. The big money is front running what is coming, and they are using price to misdirect us all. And when you see the massive amount of effort they are using to keep the prices down, in broad daylight, dump 1.5 billion ounces of silver in a period of time when no one would do that. Nobody, other than to affect price and freak people out, especially these Reddit people who have not lived through this volatility that the metals market has. It reeks of desperation, but they are accumulating, they are positioning, and they are holding down the paper price in order for them to corner the world's supply of things, commodities, before the rest of the world catches on. And when it breaks, it'll break in spectacular fashion. But I'll tell you this, there'll be no metal left for anyone else to accumulate. There'll be nothing but scraps if they're lucky. So, your inclination, your feelings are right. Things are changing. I use the kind of the analogy of if for those out there who have played sports, I played sports my whole life. And it in many ways defined me as a person my entire life. And if you've ever played sports long enough, you can be in the middle of a game, whether it be basketball or baseball or football or whatever game you played, even golf. There can be one shot in golf, one missed rebound in basketball, one error in baseball, one missed pass or interception in football, just one little thing that happens, and you can feel the momentum just turned. You can feel things turning, even if a stadium of 50,000 people watching it don't feel it or see it. If you're immersed in it long enough, you feel it. And I will tell you that what is happening now, Ken, is unlike anything I've ever experienced in 31 years, times 10. The amount of fear out there is insane. The amount of physical demand is insane. And the amount of effort employed by the people pulling the strings to keep us off the trail is unlike anything I've ever seen. And then you have governing bodies like the CFTC and the Justice Department who slap on the wrist these commercial banks who are paying billions of dollars in fines, but making many more than that. I mean, JP Morgan makes $1 billion a month, and they paid $980 million in fines and made $1 billion over the year just in their precious metals desk. The fines are not commensurate with the crime. They are letting the big players manipulate all of us, and you can see very closely that in this case, their manipulations as it pertains to precious metals is allowing the central banks, the commercial banks, the sovereign wealth funds, the family offices, all the big money, time and subsidized prices and rhetoric, keeping people away from their ability to reposition. So I'm really trying to be as sincere as I possibly can when I say to you, price is bullshit. It is the greatest tool of misdirection until it's not, until they let it go. And they will make as much money on the upside as they did on the downside. They are just trying, well, let me just simply say this. They don't manipulate it just for the hell of it. They're manipulating it for a reason. And that reason in my book, it has been since 2008. It used to be for Gibson's paradox, the inverse relationship between real interest rates and precious metals to create an illusion of a strong currency system. Now they're doing it, I think, to reposition themselves in hard assets for what comes next, for a dollar default, for a reset, a currency reset, Nasara, whatever you want to call it, it's coming. And you cannot destroy a currency the way that all the Western central banks are doing right now without paying the price. And what does that price mean? It means a whole hell of a lot of pain. And that is why the big money is going to these extreme efforts to keep people off the scent, to allow them time to reposition, to slowly sell treasuries, to slowly de-dollarize, and to slowly accumulate the world's commodities when the rest of the world is looking elsewhere.
Wow. Powerful, Andy, and a great reminder, great reinforcement as to why we're invested the way we are. Quickly, if you would, first of all, thank you so much for coming on the show. Let everyone know where they can go to obviously do business with you, get precious metals, interact with you. Obviously, I know you're so personal with the audience, the customers. I mean, that's really one of the reasons why we recommend your business. And again, I have no business relationship with Andy. I just refer people because you're a good guy. So Andy, again, thanks so much. If people want to learn more about you and do business with you, where can they go and what can they expect to find?
Yeah, absolutely. And, I'm always willing to do a business relationship with you, but I know that you like to remain impartial, and I respect that. My relationship with people in the industry like yourself mean the world to me. And in an industry and first of all, thank you for saying those things. Really, thank you. And in an industry where reputation means everything, I would like to think that we have as good of a reputation as anyone in North America. That's not to say I haven't screwed up, but I make it right if I do. In 31 years, we've never had a material customer or regulatory complaint ever. We are licensed and bonded in the state of Minnesota. This is a federally non-regulated industry where over a period of 4 years, $200 million plus was stolen by the largest online companies in America who are not federally regulated. Minnesota put an end to that by saying anyone who either sells into the state of Minnesota or is domiciled in Minnesota and owns a precious metals company must be background checked every year, myself included, and all employees. If any of us have a felony, they're blackballed from the industry forever. Must do continuing education and compliance, and must post a very large surety bond. Because of that, nearly 100% of the industry's competition will not do business in the state of Minnesota, period. What it means for your listeners is that they could not work with a safer company. We are one of only 27 authorized U.S. mint resellers in the world, and we have relationships up and down the board with some of the biggest names in the industry, including handling all of the Sprott USA clients. Rick Rule, who is a mentor of mine and one of the smartest guys I've ever known. When you have reputation like we do and relationships like we do, it is the most important thing in the world to me. I will always make sure your listeners and any others are treated with the most respect and care in the world. We have decided, because of identity theft and fraud, to close our online store. We did that last year. We are old school in that respect. We do our very, very best to protect people's privacy and identity. So we do things via a phone call. We don't post our prices. And when we did that, when we shut that down, all of our identity theft and fraud disappeared. You and I could talk for 2 hours online one day about the things that I have seen in this industry. Last year, I won't mention the name, but one of the most respected and largest online companies in America was hacked. They were hacked in February, didn't realize it until July, and didn't really come out to the public until the end of October. This is a very sophisticated online company. And when I saw that, after seeing others like it the year before go down, I shut down my online store. But as I mentioned to you earlier in the interview, and I want to end it this way, I owe a debt of gratitude to Chris Martenson of Peak Prosperity. When I was alerted because of his work in December of last year about the realities of COVID and what the implications meant. Since December of last year, I have gone on a crusade of accumulating massive, massive inventory. Your listeners will note that most of the online companies are out of product. I may be one of the only companies in America who is not. I have relationships that are 30 years old, not only with the 5 or 6 largest primary distributors in the world, but also with a myriad of small coin shops and small to mid dealers throughout North America that I do business with that others do not. I have more product in stock, I would argue, than anybody. But you have to call us to get the scoop on that. But I'm just going to give your listeners just a little bit of a teaser here, so that you understand what I'm talking about. And I'll jump off here. Don't want to bend your ear too much. In the next, either in stock or within the next week, this is all 2021. I went at the beginning of the year and I started going deep into the first and second quarter with all the major distributors, front paying them long before anyone else did for 2021 allocations. Going into my line of credit, buying more than I could afford, literally taking a big risk at high premiums to secure product into this year because I felt this year was going to be unprecedented. So here we go. I have 52,000 Kangaroos, 58,000 Britannias, 84,000 Philharmonics, 20,000 2021 Silver Eagles, 45,000 2021 Silver Maple Leafs, 6,500 2021 Krugerrands, 52 bags of junk silver, 15,000 1-ounce rounds, and 134 1-ounce Pamp Swiss bars. That is coming to me in the next 10 days or is in stock. I have been loading up on product and our prices will be as good or better than anyone in North America. You have my word on that. We are, I would like to think, a hidden gem in this industry. We do things the right way. We don't get customer complaints. We're licensed and bonded. I have relationships with awesome people like you who know me only through my actions. And these types of relationships mean the world to me. I'm not saying all of this stuff to be braggadocious. I'm telling you, it's my life's mission. I've done this since I was 19 years old. I'm 50 years old. I've owned this company for 31 years, and it means the world to me, as does the opportunity to work with the public out there. I talk to people all day long, 7 days a week. Given the opportunity to work with your listeners, we will not let you down. Send us an email at info@milesfranklin or at andy@milesfranklin, and you will be contacted very, very quickly. If your listeners put your name, Ken Amador, in the subject line, I will make sure that they get the finest price in North America. You have my word on that. So not only will we give them personal service in a very private, secure fashion offline, we will also make sure that they get the very best price competing with all of the big online distributors. And so for what it's worth, Ken, I appreciate our friendship. I appreciate the opportunity to come here and talk, as long-winded as I was today. I'm very riled up because these are unprecedented times, and I just want people to take one thing away from this conversation, and it is simply this: price is the greatest tool of misdirection. Trust your gut. Trust your gut and have strong fingertips. And remember, it's not about return on your money right now. It's about return of your money, and that's what precious metals will do for you. But when we talk about silver, Ken, I think it's the buying opportunity of a generation. The profit potential is extraordinary. And so I appreciate the opportunity to be here today. It's always good to chat with you. And I'm just a phone call away. If you ever want to get your ear bent again, please feel free to give me a holler and let me come back on.
Andy, I really appreciate your time. Thank you so much for coming on the show.
You got it, brother. Stay well, Ken.